Welcome back, everybody. We are looking at Walmart earnings here, just crossing the tape, and you've got a double beat for Walmart, reporting 81 cents adjusted on an expectation of 74 cents earning per share. Revenues came in at $187 billion, $187.9 billion versus an expected $186.7 billion. So we'll dig into these numbers. I'm Jackie DeAngelis in for Maria Bartiromo. It's Thursday, the 20th of August, 7 a.m. on the East Coast. So we just went over the Walmart earnings, and we're going to get to the word on Wall Street. Top investors watching your money. Joining me now, Barron's Investor Circle newsletter editor and Fox News contributor Josh Schaefer, RDS Wealth President and CEO Dale Smothers. It's great to have both of you. Josh, I'll kick it over to you on your thoughts about Walmart.
Yeah, Walmart coming out and really giving you a little bit more confidence in the consumer, Jackie. From a stock-specific perspective, Walmart down about 15% in between its last earnings report and this earnings report. I think Walmart has shown an ability to keep growing. You're seeing that consumer continue to spend at Walmart. The issue for me with Walmart shares has been they're quite expensive. Walmart has had a good run over the last couple of years. If you look at what you're paying for growth at Walmart, you're paying about 40 times next year's earnings right now. That's pretty expensive for a retailer that isn't growing at a crazy pace. To put it in perspective, normally 40x, you'd be buying something like a big tech company. So Walmart has been on the expensive side, and I think that's why you're seeing shares maybe slide a little bit after that release. Just not enough invigoration in the growth story here. They're continuing to grow, but not at the impressive clip that's needed given how much the stock has rallied over the last couple of years. And
that's the thing with this market. You bring up a great point, Josh, and Dale, I'll ask you. These companies are beating, but now to kind of get a reaction from the market because stocks are expensive, you need to really beat. You need to really hit it out of the park to get investors' attention.
You're exactly right. You know, they're priced for perfection, and they're definitely priced for proof of profitability, proof of innovation. To Josh's point, you know, Walmart is a little bit expensive. I love seeing the double beat. Your breaking news to me as I was coming on air, I was anticipating the earnings. And, you know, I really want to pay attention to the numbers, and you may be able to see that there, Jackie, but the same store sales number is something I want to pay attention to as well. And then the consumer being strong here with, you know, a double beat with Walmart, a very nice earnings that came from TJ Maxx. You know, it was a little disappointing, but we saw Target with the incredible earnings. This gives me a little bit of hope in the consumer, and the strength of the consumer staying strong is a must for the U.S. economy.
I think you're right. And Josh and I were just talking about Walmart. You think of it as a lower end consumer, price savvy consumer, but I don't really look at it that way anymore. It's pretty much everybody. Everybody looking for deals is shopping at Walmart and Target and some of these discount retailers as well. So I think it's more of a barometer overall as opposed to a certain segment of the market. But I want to focus on yields as well. And Dale, I'll come back to you on this because Treasury Secretary Scott Bessent announcing that the department's going to double the size of its government debt repurchases. These operations aimed at the 10-year, the 30-year Treasuries, bonds falling yesterday as a result, and the yields are slightly higher today. Meanwhile, the U.S. national debt officially eclipsed that $40 trillion mark. Investors looking for greater returns on government-issued bonds. Your thoughts here?
Jackie, this is concerning on a few fronts for us. As a wealth manager, we target those individuals who are approaching retirement. Really, that's our focus. And for retirees, I would wave a red flag of warning here that a lot of retirees are not prepared in their retirement account for a major bond disruption. You know, we saw Scott Bessent step in and put a Band-Aid, if you will, on yields climbing higher. But for everyday Americans, I want to kind of equate this to what we may be able to understand a little better. It would be like refinancing a 30-year mortgage for a 5-year ARM, and you get an immediate savings, but then the ARM kicks in just a little bit later, and who knows where interest rates go from there. That's the concerning part. We're keeping an eye on it.
That is a great way to explain it. Thank you so much for laying that out. And Josh, I just want to come to you on the Fed minutes, this idea that an interest rate hike could be in the cards if inflation stays elevated. You know, we're talking about Kevin Warsh thinking oil prices, for example, are transitory. I mean, the longer this goes, you can't make the argument that it's transitory anymore.
Yeah, Jackie, you parsed through those minutes yesterday and you saw many officials were concerned about, or essentially saying they might hike or might be in favor of a hike if inflation doesn't decline. Of course, the issue with those minutes, the meeting happened before the most recent CPI print, which we know was better than expected, and you saw inflation fall. So I think you sort of leave those minutes with not much of a different stance on the Fed, which is there are several officials concerned about inflation. They're going to want to see more months of data, but I think it probably keeps the Fed on hold for now. You need more data, and it keeps you in sort of that wait and see mode. Definitely feels like a cut at this point is very far away. Didn't hear a lot of people talking about that.
Yeah, I think you're right on that one. And just in the last minute we have left, SpaceX shares this morning. Let's take a look at where they stand. The company's under pressure ahead of another stock unlock of around 319 million shares, poised to release roughly 88% of its 13 billion shares through 2027. The company also facing a new rival in China, startup company Landspace, launching a booster rocket for the first time, $138 a share. Josh, real quick.
Yeah, we said we didn't like it at 135 when I IPO'd at that price, and I'm still a little nervous about SpaceX, but we're taking a look at correlations. We have a story on Barron's up about that. What other stocks is SpaceX trading like? It doesn't trade like big tech. It doesn't trade like a lot of aerospace or defense companies. Right now, it sort of trades like nothing, which makes me a little nervous and shows the volatility you're seeing in shares. I would like to see it start to trade with a group before I get into shares here. I think right now you're just seeing more of that IPO volatility.
Yeah, I think we just need some more time for this to kind of shake itself out to find a baseline. Josh Schaefer, Dale Smothers, thank you both so much.